Hey guys, welcome to the video. I'm Aaron. If you haven't already, check out some of my latest YouTube videos on the beginner investor and how you can get yourself stuck into the world of investing if you're just starting out. Today's video is going to be on the hottest topic of the market at the moment, cryptocurrency. First of all, we're going to get stuck into a little bit more about what actually is cryptocurrency. Cryptocurrency is a new form of digital asset based on a network distributed across a large number of computers. This allows them to exist outside of the control of government or a central authority and makes them what they call decentralized. The word is derived from the encryption technique used to secure the networks. These cryptocurrencies are stored on blockchains, which are a block of a digital ledger that records the transactions in a code. Pretty much it's like a digital checkbook keeping records of the transactions, and it's split across multiple computer networks referred to as the blocks, and the chains are the previous cryptocurrency transactions. Cryptocurrencies have faced a lot of negative criticism over the years due to a number of reasons, including their use for illegal activities, exchange rate volatility, so they move up and down a lot, and vulnerabilities to the infrastructure that underlies them. However, they've also been praised for their portability, diversibility, inflation resistance, and also transparency. So today we're going to get stuck into a little bit more about the positives and negatives of Bitcoin, and then my thoughts to take home for your decision on whether you want to get stuck in and involved in Bitcoin investing. Some of the negatives behind Bitcoin. They have a rate of money creation. So Bitcoin is designed so that new Bitcoins that are created or mined are predetermined and they're gradually decelerating in speed. So around half the Bitcoins that were ever designed have actually already been created. That money supply will increase by another 66% between now and 2025, and the rate of creation of new Bitcoins will slow, making it a fixed money supply by around about that mark of 2025. The problem when it comes to a limited supply is it affects the way that people use the currency. This means that Bitcoin users will no longer want to pay using Bitcoin because they'll want to hold it as a speculative investment rather than using it as a payment method. The only way to avoid that is to ensure that the supply of the currency increases in line with how much it's being used, so that the exchange of Bitcoin to other currencies or Bitcoin to real goods and services is broadly stable. One of the other negatives that we'd already spoken about is volatility. So it moves up and down. Sometimes Bitcoin can move up and down 40, 50%. It can also move downwards sort of 20 to 30%. So there's no stability in its acceptance for a use of payment or services is very slowed by its volatility. So it's almost uncertain. You could wake up a millionaire by it increasing tremendously in value, and then you could go to sleep poor when it decreases so much. So there's no way that it could be used as a currency based on the fact that it can move so much up and down. And what I've done to show you a little bit more about its volatility, if you look up on the screen here, is a chart between Bitcoin and then some of our more standard ways of measuring through currency and measure of value as well. So we've got gold up there, bonds, and Bitcoin is also less secure than most national currencies. Because of the design of it, anyone who can get access to your password or your private key has access to utilize all your funds and the authority to really spend them. So if you get broken into and that access is acquired somehow, then they can essentially use all of your money. So it's not like our typical means of currency where you can actually stop it or you can get money back in reserve. It's pretty much whoever has the access to it is granted the ability to use it. Now, it's not all negatives. There are some pros to Bitcoin for those of you out there who are interested in it. Cryptocurrency trades 24/7, so 24/7, 365 days a year, which is a lot more than your typical stock market or access to equities. There's only a small capital required. So normally in shares or equities, the most amount or the minimum amount you can purchase is $500 parcel. But here you can use as little as sort of $10, $15, $20 towards it. It's really easy to open an account, so you can start your account straight away. If you watch my video on diversification, which I'll put up in the link above, you would understand that to have a little tiny bit of Bitcoin is going to move your portfolio up in a positive way. You don't want to risk putting all of your eggs into one basket and having all of your money in it, because if it moves down, you're going to lose everything. But you can have a small amount of it, and that's going to be a positive means of diversification. And also, if you want to speculate on the price of cryptocurrency without owning the digital asset, you can use these Bitcoins or any of the other cryptocurrencies out there. And you want to leverage your position with only having to put up a very small amount of cost upfront. There will also be some tax benefits to it because it's not regulated as normal currency, so it won't be classified as, I guess, income. and you want to gain exposure to multiple exchanges from just the one account, and you can also just start trading straight away. So there are some benefits to it, but it is mostly speculative. So again, be sure that you have and hold a diversified portfolio and you're not putting all of your money into that one asset. Typically, there is no real way to value Bitcoin. So with a business, you can use the balance sheet, you can use their records of income, cash flow statements, and that to actually determine what the business or the equity or the asset is valued at. But Bitcoin has no real way to ensure that you're paying the right amount for it. So who knows what the actual stored value of a Bitcoin is, and if its actual price that it is at the moment is just due to the inflated way that people are getting around it. The hype is building the price up. So you never really know what it's actually valued at. So you can never really make an informed decision as to what you're willing to pay for it. So my choice is to have I have like a very, very, very minuscule position in Bitcoin. And that's purely due to the fact that I want to hold just a tiny bit. And if it gains, perfect. I'll take some of those gains and put it into my passive investments. But not putting myself into any sort of risk-averse way of letting myself move too much into a negative if it moves around, just due to the fluctuation. So it's up to you. If you feel that you want to take that risk, you've got a bit of money to burn, and you can justify your thoughts as to why you want to get it, for sure, go ahead. But personally, I'm not in it for the short term, and anything long term is only going to be a buy and hold method to work towards. So hopefully this video has helped clear up a few things for you guys. You again can make your own decision whether you want to get involved in cryptocurrency and build into the hype, but make sure that you take adequate steps as to getting into it and making sure that you don't put all your eggs in one basket. So thanks for tuning in today, guys, and I hope to see you in the next video.